2019, a 42-year-old father of three named Marcus had what he believed was good insurance. He had life insurance through his employer. He had health insurance with a $1,500 deductible. He had auto insurance with full coverage. Then a drunk driver ran a red light. Marcus survived. But when the bills arrived, the medical bills, the lost wages, the lawsuit from the other driver's family, Marcus discovered something that will shock you. His insurance left him with over $180,000 in out-of-pocket costs. He lost his house. He filed for bankruptcy. He had insurance. He just didn't have enough of the right kind. Marcus is not alone. According to a 2023 study by the Kaiser Family Foundation, 68% of insured Americans are what experts call underinsured. They have coverage on paper, but that coverage has gaps so large that a single serious event, a cancer diagnosis, a car accident, a heart attack, would financially devastate them. We are living through a silent insurance crisis, and the insurance industry has little incentive to fix it. Today, we're going to break it open. We'll look at life insurance, health insurance, and auto insurance. We'll show you exactly where the gaps are, how much they cost, and most importantly, what you can do about it. Let's start with life insurance, because this is where the gap is most devastating and least understood. The most common way Americans get life insurance is through their employer. And here's the problem. Most employer life insurance policies pay out 1 to 2 times your annual salary, the industry average. Financial experts, however, almost universally recommend 10 to 12 times your annual salary. So if you earn $60,000 a year, your employer might give you $120,000 in coverage. But to truly protect your family, to cover the mortgage, the kids' education, lost income for a decade, you need $600,000 to $720,000. That gap, $480,000 to $600,000. That's not a rounding error. That's a life sentence of financial struggle for the people you love most. And it gets worse. Employer life insurance is not portable. The moment you leave that job, voluntarily or not, that coverage disappears. 40% of Americans change jobs every 3 years. Most of them lose their coverage without ever realizing it. So what should you do? The answer, for most Americans, is a simple term life insurance policy. Term life is insurance for a specific period, 20 or 30 years, that pays a death benefit if you die during that term. A healthy 35-year-old can get $500,000 in coverage for around $25 to $35 per month. That's the price of a streaming service. And unlike whole life insurance, which insurance companies aggressively push because of the commissions they earn, term life gives you maximum coverage at minimum cost. The bottom line, check what your employer actually provides. Then calculate 10 times your income. If there's a gap, fill it with a private term life policy. Now let's talk about health insurance and the trap that catches millions of Americans every year. You might think having health insurance means your medical bills are covered, but here's what most people don't read in their policy. There are 3 numbers that determine your actual exposure: your deductible, your out-of-pocket maximum, and your in-network boundaries. The deductible is the amount you pay before insurance kicks in at all. The average individual deductible in America is now $1,763 per year. For families on employer plans, that rises to $3,811. But many marketplace plans have deductibles of $5,000, $7,500, or even $10,000. This means a single hospitalization, before insurance pays a single dollar, could cost you 5 figures out of your own pocket. But the deductible is just the beginning. The second trap is out-of-network charges. Even if your plan has a low deductible, if you receive care from a provider outside your insurance network, you can be billed at the full uninsured rate. In 2020, Congress passed the No Surprises Act to limit some of these costs. But surprise bills still happen every day, particularly for emergency situations where you have no control over which provider shows up. Anesthesiologists, emergency specialists, air ambulances, all frequently out of network, all frequently sending 5- and 6-figure bills. The third trap is prescription coverage tiers. Most health plans divide drugs into tiers 1 through 5. Tier 1 drugs might cost $10, but a Tier 4 or Tier 5 specialty drug can cost thousands of dollars per month, even with insurance. Before you get sick, find out which tier your essential medications fall under, because finding out after costs a fortune. Now we come to auto insurance, and the coverage that almost nobody buys, but that could be the most important coverage you ever have. You probably know about liability coverage. That's what covers the other driver if you cause an accident. You probably have collision coverage too. That covers your car. But there's a third coverage that most people skip: uninsured and underinsured motorist coverage. Here's the frightening statistic. 1 in 8 drivers on American roads right now has no insurance at all. 1 in 8. And many more carry only the state minimum, usually $25,000, which won't even cover a single night in an ICU. If an uninsured or underinsured driver hits you without this coverage, you pay the difference, out of pocket, no matter how badly you're injured. In some states, you can be left completely without recourse. There are 2 more auto coverages worth understanding. The first is gap insurance. When you finance or lease a new car, your vehicle depreciates faster than you pay it off. If your car is totaled, standard collision coverage only pays the current market value, not what you owe the bank. Gap insurance covers that difference. For someone who bought a new car with little or no down payment, gap coverage could be the difference between financial stability and owing thousands on a car that no longer exists. The second is medical payments coverage, sometimes called MedPay. This pays your medical bills after an accident, regardless of who is at fault and regardless of what your health insurance covers. For anyone with a high deductible health plan, MedPay can fill a critical gap in the aftermath of a crash. So how do you fix this? The answer is a structured insurance audit, and it takes less than 30 minutes. Start with your life insurance. Pull out your employer benefits summary and find the exact death benefit amount. Divide it by your annual salary. If that number is less than 10, you have a gap. Get quotes for a 20 or 30-year term policy from at least 3 providers. You'll likely be surprised how affordable it is. Next, review your health insurance. Find your summary of benefits and coverage. Every plan is legally required to provide this document. Look for your deductible, your out-of-pocket maximum, and your in-network provider list. Then verify that your primary doctors and any specialists you use are in-network. If they're not, switching providers now could save you thousands. Finally, pull out your auto insurance declarations page. Look for 2 line items: uninsured motorist coverage and medical payments coverage. If they're missing, call your agent today. Both editions typically cost between $50 and $150 per year. Insurance is not a product, it's a promise. And like all promises, what matters is not whether it was made, but whether it can actually be kept. Marcus thought he had a promise. He didn't. You don't have to make the same mistake. Spend 30 minutes this week reviewing your coverage. It might be the most valuable 30 minutes of your financial life. If this video helped you see your insurance differently, subscribe to InsureSmart. We break down the policies, the fine print, and the strategies that the industry hopes you never discover. Every week, for free, because knowledge is the best coverage of all.